Okay, let me explain why pin risk matters. And this is a lesson that you'll use for the rest of your option trading career or life. It's very, very, very important. So sit, 3,200 open interest. Now we need to use our imagination a little bit. So let's say that sit's trading at 49, okay? So sit trading at 49, and the 49 calls OI of 3,500. Volume for the day is 167,000. Okay, let's start there. So that's the premise that we're going to do this lesson on. Now, let's say there's 30 minutes to the close, 15 minutes to the close, 5 minutes, 1 minute. Okay? And the close just means market expiration. Okay? So now let's use 3,000 because it'll be easier on the math. Okay? So the 49 calls have an open interest of 3,000. I know it says 3,200, but we're going to use 3,000. The stock's trading at 49. Okay? So the stock position and this is the position of the person who owns the 3,000 calls. Position of person who owns $3,000 calls. Okay. So if 30 minutes to the close, the stock's at 49.20. Then the stock's at 48.80, 49.20, 48.80. Okay. Now, are you guys following along? So sit's trading at 49. 49 calls have an open interest of 3,000. We're doing this example for the person who owns the 3,000 calls. The average volume, or the volume today, is 167, 171 now. 30 minutes to the close, 15, okay? This is the price the stock's trading at each one of those. Okay, is everyone following along? Does this, the way that I'm sharing this, does it not make sense to anyone? It makes sense? Okay. Good, 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 good. If it doesn't, tell me now, or else it's going to be overwhelming. Now my question is, right here, what's the person who owns the 3,000 calls? What's his stock position at expiration if the stock's at 49.20? Okay, so the question is, the stock's at 49.20. The fella or gal who's long 3,000 calls, what's his stock position right here? He's in the money by 20 cents. There's 30 minutes to the close. What's the stock position? Sam, excellent. Anybody else? Jody, you got one too many zeros. $300,000, right? Because if you own 3,000 calls that are in the money, at expiration, you're long 300,000 shares of stock. Okay? That makes sense to everybody? So what do they need to do? What do they need to do? Okay. Jody, let's say, okay. So how about this? What do they need to do if the options are illiquid and they can't just sell the calls? They got to sell stock, right? So right now, if they don't want a position, they can sell 300,000 shares. And the reason they're going to do that is because they want to lock in 20 cents, right? Because they're going to be long stock from 49 and short stock from 49.20. Okay? That makes sense? Good. So when they sell 300,000 shares, or when they try to sell 300,000 shares, the volume's only 167. What's that going to do to the stock price? It's going to knock it down, right? At 48.80, what's the position of the person who owns 3,000 calls? So what's the position here? Jody, excellent. So what's the position of the person who owns 3,000 calls? So yep. So watch. So the calls, he doesn't have a position, right? The calls are worthless. 48.80, he owns the 49 calls. It's out of the money. But he's short 300,000 shares. So what does he need to do? He needs to buy 300,000 shares. Okay? When he buys 300,000 shares, the volume for the day is 167. What's that going to do to the stock? Rally, 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 rally. So right now, his position right here is he doesn't own any stock. He just made 40 cents on 300,000 shares. Nice little scalp. His calls are out of the money. But now, 5 minutes of the close, his calls are worth 300,000 again. What does he got to do? He's got to sell 300,000. When you sell 300,000, there's only 167,000 volume. It's going to knock the stock down. 1 minute to the close, his calls are worth 0. He's got to buy stock back. And that, my friends, is why we have pin risk. That is why when this happens, a stock is going to have a very difficult time getting away from the $49 strike because of all this stock. And that's what, we're not at the 49 strike, so it's a non-issue, but that's what would be happening if we were. You see how important it is to know about pin risk? So what's actionable for us is if you own the 49 strike, just get out, just cover your options. This is where the options market can be a little tricky, because if you're long 10 calls on the 49 strike and it expires at 49, you don't know if you're long 1,000 shares or short 1,000 shares. Or you don't know if you're long 1,000 shares or you don't have a position, because it's settling at 49. Now, the market closes at 4:30 Eastern time or 4:15 Eastern time, right? But the options don't settle until 10 a.m. Saturday. So what could happen is it could close at 49 and it could settle at 40. Who knows? If news comes out after the close, you could be long shares and not realize it, and it opens at 40. So you never want to mess with pin risk. But pin risk is not something like, pin risk is real. This is 100% real, and this is why stocks pin. Okay? I encourage everybody to make sure you understand that. That is a lesson that will be with you for life. Any questions on this, guys? That makes sense, though? You understand the importance of that? Ed, what do you mean, buddy? Ed is saying you learned a lesson early on with covered calls. I just don't know what that means. I'm going to go back. I think I missed a few questions. If I missed your question, Sam's question. Sam, are you on here? You're on here. Good. Here's Sam's question. Bought 400 shares on open, about 1975 stock when it went down about another $3 over the next few days. Sounds like I'm being too impatient. Yeah, Sam, you waited $5 to get in. Who knew it was going to fall that much more? So that's a good trade. Okay, Ed. Okay, so Ed, you're just making a statement. You're not asking a question. Is that fair? Yeah. So Sam, I think that's darn good. You waited $5 before you got in. Hey Jody, Sam's talking about IO. There was another question that Marilyn had, I believe. Marilyn, you on? And Marilyn was talking about the markets in Sedge, that the market makers were making silly markets in Sedge. Okay. So Marilyn, I think that you were just asking that because of the mark. Just going back here, Deb's asking a question. What was the so Deb, what was the profit if you would have done this? 80 cents 300,000 times, 240,000. But it's just an example, right? It was more about the example than the profit. But the profit would be, you made 40 cents here, you make 40 cents here, that's 80 cents. If we made $1, it'd be 300,000. 80 cents is 20 cents less, so 240, I think. If that math is correct, which I'm pretty sure it is. Do you guys realize, and this has come up a few different times in the Facebook room now, but if you're long like the 34 calls or the 33 calls in Sedge, or if you're long a deep in the money, if you're short a deep in the money put, if you're long a deep in the money call, or if you're long a deep in the money put, like this 33, for example, you just own stock. You don't own options. So if you're long 10 of these, you own stock. There is no optionality in that stock whatsoever. And the way that you can see that, for one, go to the puts. You see the puts have no premium in there, right? Like these have premium. These do not have any premium. But what you could also do is like if you want to know what these are worth, 45.30 minus 33 equals 12.30. These are worth $12.30. They are just stock. If you can buy them for $12.20, somebody is giving you a dime for free. Okay, so it's really important to always look at your puts. So if you're long calls, look at your puts to see how much premium is in the options. And if you're long puts, look at the calls to see how much premium is in your options. And the good example is if you have a trade that expires in September, October, further out, but it's a big winner for you, just make sure if you own the options that there's still optionality in that position. If there's not optionality, if there's not premium in that position, then you just own stock.